We're in a bubble right now, and the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble, and we better be awfully careful.
Hi, welcome to the Market Alert for Thursday, the 2nd of March 2017. So Trump talks about the big, fat, ugly stock market bubble and the Fed being political, which is true, but there's a problem here. There's an irony, in fact. We've got a situation where on the winning of the US election, the market was down here at the 18,000 level, and it's now at 21,000. That's 3,679 points higher from the low that Trump won the election. That is a bubble, and that bubble has come about after the bubble that he was talking about. So the insanity continues, and there's no doubts about it. We're in what's known as a parabolic move to the upside. It's all rhetoric that the market's moving up on. And if you look at this article here from David Stockman, who I have a lot of time for, he, in an interview with Greg Hunter the other day, he said that Trump's economic figures were in la-la land. And David Stockman should know because he was the former budget director under the Reagan administration in the 80s. And as he said, in the 80s we didn't have the debt. Now he's sitting on 20 trillion of debt. So as he says here, what's going on today is complete insanity. We can all see this, but unfortunately the market is continuing to move higher. And this is going against how we all feel psychologically, because we all know the economic data isn't supporting it. We've had under the Obama administration, he never actually had 3% of GDP. And as he says here, Trump is so deep in fiscal la-la land, he won't even find the wrong envelope. He is saying crazy things, and he certainly is. There's no doubts about that. And eventually the penny will drop with everybody and the whole thing will come tumbling down. There's no doubts about that. But at the moment, as you can see from the chart, the market is continuing to move higher. And I'll keep barking on about this, because if you go to markup and you get a 50% retracement, and where the market broke out and you just keep drawing it in, you will see there's not a single occasion where the market has actually traded down to the actual 50%, let alone close below it. This market remains on the buy side. Yes, it's insanity. Yes, it's not sustainable. Yes, the market gets weaker as it goes higher, but it's going up, and that's what's important at the moment. Now, there are some clues that there's some weakness coming in, and also that there is some nervousness about as well, which I'll cover in just a moment. But how can we determine when this move is going to be over? And I'll just go back to, so I've got rid of this lot here, just to clear the decks a bit. Let's just leave the last one in so that we know where we are as far as measuring the momentum. If we go back to here, we can see that the market went up, came back down, and then reversed and went up. Now when we get to a market top, I'm going to try something different this morning. I'm going to use the Camtasia arrows here, so wish me luck. I've never used these before. But what we were hoping for here is the market to come down, retrace up to 76%, which is around there, and then move lower. But it didn't, and the reason for that is purely and simply, let me just draw in this for you. We had the high there down to the low, and you can see the market going through the 76% there. I'll just drag that across, and as I said, if you go back and look at the market alerts at this time, if the market also took out the high, then we would continue higher, and that's precisely what we've done. Now we got into the lows in the implied volatility here. The market came back, wouldn't break the 76%, which is why that's been on the chart ever since it hit it, and the market's moved to the upside. So what we're looking for, again, just to reiterate this, we're looking for the market to, well, I'll tell you what I'll do, I'll draw it on the top so we can actually see it. So the market is going to remain long until we get a pullback and a close back below this level. The market goes up to 76% and then breaks this area here and moves lower. Until that time, the market remains on the buy side. And again, it's only rhetoric that's pumping this market up. Everybody knows that. And again, there is nervousness in the market. Now let's just look at the 5-minute chart from yesterday before I get into what's behind the nervousness and why I believe it to be the case. So yesterday morning, well, lunchtime, we see the market starting to move. By the time the market opens, we've already put on 100 points, and I'm just going to go to indicators here, and I'm going to show unqualified. It wasn't that we didn't have any signals yesterday. We did, they just didn't get filled within the 3-point bars, which is a shame really, because we had a nice bit of momentum moving the market to the upside there. So there was no shortage of signals. The market was obviously tied, having already moved significantly, and then it traded sideways when the signals came in after it moved back to the upside. So there's nothing we can do about that apart from extending the number of bars to be qualified. Let's just have a quick look at today's news before moving on. We've got nothing out during the Dow main session from 2:30. All the news is out beforehand. So let's just talk about a couple of other things that are happening in the background as well, and that's we've got the Dow there. I'm just going to go to gold. Now, since December, gold put in the bottom and is moving to the upside here. And the fact that gold is normally inversely related to the market, you can see that it's gone up quite significantly. It's the weekly chart and the monthly chart there as well. And gold is bought due to uncertainty and also inflation. So behind the stock market bubble, we've also got something going on inside of the sort of insurance markets, as we would call them, the gold markets, and also the silver market as well, which is also following suit. You'll see exactly the same picture there for the silver market as well. So this is interesting. Again, you've got the bubble in the stock market, but you've also got a lot of the smart money heading into the gold markets as well. And also on the 15th of March, it looks like now we're 80% for an increase in interest rates. I said last week that was very highly unlikely, but it seems that the consensus is now to move and increase interest rates on the 15th of March, which is going to be a live session from the Fed. They only have them in March, June, September and December. So that's going to be interesting as well. Now on the implied volatility front, I'm going to use my chart today. In fact, let me just show you what the figure is. It's 1025, which you can see there, and it's off just slightly. It's a lot clearer in the 3-month chart that I've actually created. And again, we have a warning here. If we go back to January, you can see the market was starting to move down. We had the lows in the implied volatility, and then the market started to drop. That's where we saw again, where we're even in the, we had that, it came down, it bounced back, and then we were looking for that, and it just didn't happen. So we got the lows there in the implied volatility, which is due for a correction. We start to see the correction, but then the market moved back to the upside because it closed back above those highs and broke back out to the upside. No problem with that. Perfectly normal if we don't get a close below the 76% retracement on the downside, which of course would be from there back to there. So the markets continue to move high, but what's fascinating here is we had these lows. It started to increase in the implied volatility here, which is perfectly normal as the market started to drop down there. But then as the market started to move higher, it dropped down, and again, that's perfectly normal. That's the relationship. But what's happened is that the markets continued to move higher, but the implied volatility is also going in the same direction now, and that's not a good indication at all. It means we are due for some sort of a correction coming in this market, not necessarily a crash, but certainly a correction and some sort of profit taking. It can't continue. Nothing ever continues forever, but when you're in the middle of it, it seems like it's going to last forever. It's a bit like being in the middle of a storm. You don't think it's ever going to end, but it will. It just needs time before it does so. So if you look carefully, you can actually find a few other bits and pieces in the background that are indicating that the market is starting to be, well, certainly the big money is certainly being cautious. We know they're sucking in the retail buys. We saw that from the Merrill Lynch article the other day, which I think was in Monday's Market Alert. If not, it was Friday last. So again, go back and have a look at that as well. So again, just to keep in mind, the market is going to continue to move higher until, let's just do a quick review of this. The market's going to continue to move higher as it makes these rising lows, and you can see already we're starting to move to the upside. We've got to take out this high for the market to continue to move higher at the moment, and then we can move up the 50% tomorrow. We're above the 20 bar average as well. The market is on the buy side. Any sell signals will be short term to the downside, and then the market's likely to find support. Now we've probably got this pattern and up move to remain until obviously around the 15th of March before the Fed decides on whether it's going to increase interest rates. So there you go. That's my view on and take on things at the moment. And again, like I say, there are things in the background if you look for them, but at the moment, between now and the 15th of March, it's likely the market's going to continue sideways to higher, unless we get something of a geopolitical nature that comes in and creates that situation where the market comes down, goes back up to 76%, and then moves to the downside. But other than that, we will just have to wait and see, and no doubt the market will continue this way for the time being. Right, that's it for today. Apologies, it's a bit longer, but a lot of information there at the moment. I just wanted to bring it all to your attention and give you a few bits of food for thought. Really is years and years of looking at this, what's going on in the background, and how it's likely to unfold and play out in the coming 14 days. Right, that's it. I will see you in tomorrow's. We're reporting during today if necessary. Other than that, thanks for watching. See you in the next.